Joining me now is Greg Melich, equity analyst for hardline and retail at Evercore ISI. Greg, welcome.
Thanks for having me.
I hope you can explain housing. It makes people's heads hurt because on the one hand, we still hear about bidding wars and, tons of, price spikes. But on the other hand, we know that literally turnover activity for the market, broadly speaking, is way down from pandemic levels. Where does that leave the housing stocks?
It's a great question. I think so. The housing, and Steve Kim is our expert there, has been, I think, a little better than expected, and in large part because we still think that there is a fundamental housing shortage. We can debate whether it's 2, 3, 4 million units that was building up even before COVID. So as supply's coming back on, you are getting a little bit of pickup in housing turnover. The problem is it's a different cycle than for home improvement, right? And so it's our home improvement lead indicator that actually went negative about 7 months ago and is running at the worst level since in over 12 years. And that's because it's not about new housing construction. It's more about housing turnover was down last year. So traffic to the stores now gets hit this year. Plus, as home prices start to decelerate or even slip a little bit, that'll start to hurt tickets. So we just think home improvement demand, not new housing particularly,
right,
but home improvement demand will fall 2% this year.
No, it's fascinating. And basically, I think for people, we all have to think about this as home improvement stocks are keyed off of existing housing sale, existing home sales, ironically, not new home sales, which is more for the builder. Anyway, let me get to the point here where we have Home Depot down year to date. And based on what you said, that makes sense. Why is Floor and Decor up 30%, right? I think, Trex, we're going to speak with the CEO, another stock that's up well. So a lot of these home improvement type of names are up strongly, and yet the big boxes aren't. So I also find that odd.
Yeah. At Floor and Decor, I think it's a good company longer term. I think that some of those names that are up so much, a lot of it was how poorly they did at the very end of last year.
True.
So, Floor and Decor had a really tough, basically November, December, that allowed it to go up a lot this year when they did guide down earnings a little bit earlier in the year. The issue with Floor and Decor is that they still, when they reported last week, they said trends were softer into the second quarter, but they didn't change their full year guide. And so from a tactical standpoint, that's why that stock gave back a lot of its year-to-date gains. Frankly, we think Lowe's could be set up for a similar situation where we're below their guidance and we're below the street for this year. Not massively, but if second quarter isn't any better than first quarter, which we think was down around 3% for Lowe's, we think that the street numbers will probably end up coming down, and they might end up steering people towards the lower end of their current guidance.
What's going on with Tractor Supply? A similar macro, or are you taking it out because it has done well?
We put it in a few months ago, and it had a nice 15% move, and so we figured, you know what, we'll take that. We'd love to annualize it somehow.
Sure.
And then since Walmart was one where we think there's better traffic momentum incrementally into the second quarter, and we upgraded fundamentally on that traffic turn, we figured it was time to get that one in there.
No, my only question on Walmart, which remains one of the best stories in retail ever since I remember going daily as when I was growing up, is why wasn't it in your top 5 to begin with? Why did it come out?
Yeah, we run the top 5 as a top 5 portfolio, and we've done this start a few years ago, and we try to be not tactical about a week or two, but more about a 6 month. So our normal ratings go out 12 to 18 months. And what we were thinking about with Walmart is back in March, it was in the low 140s, and we wanted to get some more confidence at their analyst day that it wasn't going to cost them too much to get this traffic acceleration and roll out a lot of the innovations that they have to improve logistics and efficiency. And then we got that confirmation. And then I think our work suggests that while sales did slow in March and April, they didn't slow as much as they did for the rest of retail. And those are the two things that put us together that said, you know what, it probably has to catch up to the other staple stocks. Yeah,
I know you also saw some positive trends with AutoZone, maybe less so for BJ's. A lot of churn right now as people work through a little bit more difficult couple of months here. Greg, thanks for joining us ahead of a lot of these results. We appreciate it.